Hey everybody, did Fed officials just warn Americans that the worst is yet to come? I think so. We're going to talk about that here in just a minute. First, you're watching Bull Boom Bear Bust. My name is JJ, and we're back here with another dose of economic reality. Please hit that like button and try to get this video some traction if you would. That would be excellent. Let's go ahead and get into the first article here and tell you what's behind it. Fed officials say full impact of rate hikes is yet to come. Still not seeing the full effects. Richmond's Barkin, that's one of the officials there. Atlanta's Bosick also says this policy likely sufficiently restrictive. All right, so let's talk about this and tell you what this means here. Basically, we haven't felt the impact of the rate hikes yet. Americans have been living on borrowed time and borrowed money. And if you look at what's transpired over the past, especially the last 6 to 9 months, right, basically the beginning of 2023, is you have Americans looting their 401k accounts just to get by. And these aren't people taking out things to do big projects like home improvements. They're taking money out of their 401ks. And that's just one example of robbing Peter to pay Paul. But they're taking this money out for basic needs, getting by, filling up their tank, buying groceries, paying their insurance premiums. It's insane that it's lasted this long, but at least now we actually have some Fed officials out there saying, yes, the worst is yet to come, yet to feel the full impact of the rate hikes. And we know that debt is exploding higher. So, of course, the worst is yet to come, just based on looking at the fundamentals. And one of these officials is out there saying that it remains to be seen whether the Fed needs to do more. Well, obviously, that answer should be pretty simple. If the Fed's inflation target's 2%, and even the official numbers 3.7%, which is almost double of the target, then of course the Fed needs to do more. But the Fed knows that the consumer is skating on thin ice. And we're going to talk about consumer debt here in just a few minutes. It's off the charts. Actually, I've got a chart here to look at. So I think your mind's going to be blown on it here. How much higher the debt is compared to the 2007, 2008 financial crisis. But we'll get into that in a minute. First, let's talk about this. Rising delinquencies offer economic warning signs, but yet we have all these other messages out there that are trying to paint the picture of everything being fine and trying to convince everyone that everything's going well. Like we have Janet Yellen out there, saying that consumers are strong and resilient. We've got similar words coming out of the Fed, Chairman Jerome Powell. But we see the rising delinquencies. We see the debt, which is massively beyond what anyone would have ever believed, especially when you saw what happened in the financial crisis. And let's just go ahead and bring up a chart here. And we want to focus on the blue line. That's credit card serious delinquencies. And we just zoomed past what the delinquencies were prior to the health crisis there. Because remember, going into the health crisis, things were looking pretty dire as far as people behind on their payments. Rates had risen a little bit in 2019. Of course, they dropped them down to rock bottom once 2020 and the events of 2020 hit across the world. But you could see now that credit card delinquencies have zoomed up past where they were prior to 2020. The only one really coming down since then is student loan debt, and that or student loan delinquencies rather. Debt is up, but the delinquencies are down pretty significantly because they didn't have to make payments. But you're going to see that one shoot back up here, I think, in a matter of months because we just started these last month, talking about student loans being repaid. We just started that last month, so that's going to zoom upward without a doubt. And I think credit cards are going to spike almost to a straight up and down chart. It's going to be so serious. And it's not just me saying that. At least we have the Fed, people out of the Fed actually saying that now too, that the worst is yet to come. And I think one of the most concerning parts is these debt levels are rising and delinquencies are rising, even though people are working a record amount of second jobs and gigs and side hustles and overtime also. Take a look at this here. Recent article, 36-hour shifts, 80-hour weeks. Workers are being burnt out by overtime. Americans say they're being required to work an exorbitant amount of overtime to compensate for staffing shortages that have plagued the economy. Now, we've seen this in a few different areas. Actually, when you think about it, remember back when they had the moratoriums and people didn't have to pay their rent? Well, we saw a lot of landlords really raise the rents pretty heavily on the people because they wanted to make those people that were paying make up for all the people that weren't paying. So that's just one of the reasons why we saw skyrocketing rents. Of course, rents are correcting now since a lot of those rescue programs are over. But here's another example of how one person has to compensate for or pay for, in this case, work more hours for somebody not working, right? So somebody not paying rent, somebody not working, working longer hours. You're being asked to do more work at your job to make up for staffing shortages, longer hours, more work. So it's no wonder people are burned out by overtime. That's what the article says. It goes on to talk about a firefighter that worked a 36-hour shift because of staffing shortages. Um, you have to wonder how much more people can put up with this. And you do see a lot of mental health problems coming out too about the same time as people are being expected to work such longer hours and longer shifts. And you have to wonder if there's actually a connection there between a lot of the problems that we're seeing as a society, all the depression and angry people, a lot of road rage out there. I think a lot of this is financial stress and strain and people working too much. Now, let's go ahead and shift gears a little bit here. With the stress that's happening right now in the financial system, we're seeing a lot of strange things happening with banks, not only bank failures, but outages. Remember, Bank of America, people couldn't get their money out. And in other cases, I can't remember if it was Wells Fargo, Bank of America, or Chase, one of them, people's deposits were missing and they said it was a glitch. And then they found where the funds were at or where the funds or why the funds couldn't be seen when people logged into their accounts. Well, now we have this. We have the world's largest bank basically got attacked and went out. Now, a lot of people haven't heard of this bank. This is a China-based bank, but they have U.S. branches here. Let me go ahead and bring this one up here. World's biggest bank has to trade via USB stick after attack. The incident caused ICBC's clients to reroute some treasury trades. All right, so this is a trading house. Trades handled by the world's largest bank in the globe traversed Manhattan on a USB stick. Or Industrial and Commercial Bank of China Limited, the U.S. unit had been hit by an attack, rendering it unable to clear swaths of U.S. Treasury trades after entities responsible for settling the transactions swiftly disconnected from the stricken systems. All right, so it makes you wonder, is something bigger going on in the financial system that we're not being told about? Is there more strain happening behind the scenes? All right, so just something else to keep in mind. I always encourage everybody and try to remind people to keep at least 30 days emergency goods and cash out of the system, cash, food, water, emergency supplies, in case we do see these attacks escalate to a much larger scale. And if you look at what's happening globally with the escalations of these wars and the U.S. basically being involved in these wars now, not just financially anymore, but actually sending troops over to these regions of the country into battle zones in some cases. It looks like we're making more enemies out there. And could there be some hostile nations that are looking to take America down, or maybe at least take down our financial system, right? Because when the system comes down, when the financial system freezes up, everything goes to basically hell because the supply chains, food getting delivered to the stores, everything depends on the credit markets and the debt markets to keep flowing. And that's another reason why they're so afraid to let banks fail. And that's why we have this too big to fail bank mentality, because the whole system is propped up on spending and the issuance of credit, aka debt, in order to keep it going. And there's also a lot of misleading information out there, if you ask me, especially when it comes to inflation and deflation. So we're told that there's a fight against inflation right now, but yet they're afraid to raise rates even more. I mean, rates are pretty high now compared to the last 10 years, but if you're fighting against inflation, just go ahead and raise them higher until inflation comes under control. You haven't hit the 2% target if you're the Fed, but they're afraid of deflation. In fact, deflation is looked at as a very bad thing. Take a look at this headline here. This is out of the Times, and this is what's happening over in China. China prices fall again, renewing fears of deflation. Deflation, aka a lower cost of living. Stuff is cheaper. Goods are cheaper. services are cheaper, products are cheaper. Is anyone here afraid of cheaper stuff? I'm not. Consumer prices declined for the second time in 4 months, while prices charged by factories and other large producers have now been tumbling for over a year. So here's another example of what happens when you have a lot of production and manufacturing in your economy, just the opposite of the US. We import most of what we have here from China, but China has an excess of goods, so they're seeing deflation. And Bloomberg, same thing. China's fight against deflation may be far from over. So not only do they not like it, they're fighting against it. So if deflation is bad, then I guess the countries that have hyperinflation, they're doing great. So Venezuela's doing great. Zimbabwe's doing great. We have to have wheelbarrows of money to go eat lunch. Insane how deflation is looked at as a negative thing. There's another article on the same topic here. It's out of CNN. Plunging pork prices tip China back into deflation. So you go to buy a pork sandwich and it's half price. Oh no! Oh no! My sandwich is half price. What are we gonna do? Deflation is gonna get us all. I want to pay full price. The next time you're at a store and something's on sale, say, no, I want to pay full price for this. Mark it back up because deflation is bad. Crazy, right? It's insane. Just look at it from a common sense view, folks. They're saying that lower prices, they're saying deflation's bad. Now, what they're saying is, oh, companies are not making as much money because the cost of goods and items are dropping. But what about the consumer? What about the consumer being so far in debt? People can't afford higher prices. Okay, so enough with this deflation is bad talk. But if everywhere you look, that's what they're trying to pump out there. Also, when there's inflation, remember that's used as a metric to try to convince people that the economy is good. What they'll say is, when people spend more money because things are more expensive, they say, look at consumers. Consumers are strong. Look at all the money they're spending. They must be doing very well. In the meantime, the only reason consumers can even buy anything is because of borrowing and debt and swiping credit cards, taking out loans, borrowing money. Otherwise, the whole economy would come to a screeching halt. Can you imagine if we couldn't take out any more debt as a whole, as an economy, as consumers? This whole economy would come crashing down so fast. The whole Ponzi scheme, any Ponzi scheme, relies on new money continually coming in, just like a multi-level marketing where you get new people under you and new money coming in. Bernie Madoff type of Ponzi scheme, new investors coming in to pay off the investors at the top. But when new money stops coming in this case, when new debt stops being issued, the whole pyramid slash house of cards slash Ponzi scheme comes crashing down. And speaking of a debt binge Ponzi scheme, take a look at this CNN article here. U.S. credit card balances see largest yearly leap on record. So not only are people getting into more debt or further into debt, the amount of debt they're taking on is setting new records. It's higher and higher and higher each quarter, but yet we're told again the consumer's strong. That's economic strength. Look at the spending. This gets tacked into the GDP numbers, which is gross domestic product, which is used to gauge how well an economy is doing. But really what it does mostly is just gauge how much debt people are accumulating. And speaking of debt, let's go ahead and go to this chart right here. U.S. consumer debt climbs to $17.3 trillion. Let's go back to 2007, 2008 on the chart. Can you see my mouse there? We were just over $12 trillion. Now over $17 trillion, but yet nobody's calling this a financial crisis. There's no problems. Everything's fine. And, this could never be paid off. I mean, 12 trillion of the current debt is mortgage debt, just over 12 trillion. Never can be paid off. People can't even pay off $1 trillion they have right now in credit card debt. You think this is going to be paid off at any point? Of course not. It's basically debt for life. Debt doesn't go down because when debt goes down, that's deflation. That means people are spending less. Can you imagine making more and spending less? That would be a great thing, but yet that would be painted as the devil, by the financial media. It's crazy how backwards everything is and how most people really don't even see it right in front of them when it's being reported. Also, late payments and delinquencies are up wherever you look. The only place they're not up is student loan debt. Student loan payments is because they didn't have to pay over the past few years. but that just resumed back in October. So I'm pretty sure in just a couple short months, we're going to start seeing the defaults and late payments on student loans also start to climb to beyond financial crisis levels. All right, everybody, we're going to wrap this one up here. Like to hear from you down in comments. A couple people commented, JJ, why are you always so down and depressed and negative? No, it's not that. I'm just reporting the news. If you guys saw me outside of this channel, I'm a pretty happy-go-lucky guy. I'm always joking around, laughing. My kids say I act like a. My kids say I act like a kid because I goof around so much and joke around too much, even for them. They say I embarrass them because I'm always laughing and goofing around. So no, I'm not always serious or in a depressive mood or looking at things negatively. I don't come home and say, "Oh, what's for dinner? Is the dinner going to be spoiled? Is it going to make me sick? Am I going to get food poisoning?" I don't say that. No, because it's not negative. Dinner's a good thing. I'm like, "Thanks for dinner, wife cooking dinner. Thank you so much." But when the news is what it is, it's hard to paint this type of news, this type of debt, and everything that's happening right now. The what's the word? The deception out there, and how the economy is really functioning and how the economy is actually doing. It's really disturbing, right? So I just feel like I have to report on it. Not a negative person at all, just economic reality as far as I can see. So what do you think? Please let me know down in the comments. Am I right? Am I too much doom and gloom, or are these just facts? These are just facts and numbers. When you look at the numbers, these things are really happening. I'm not making these things up. I showed you the news sources. These are real articles. I didn't write these articles, so I'm just reporting them, folks. So the main thing is don't be depressed, don't be scared, don't be fearful. Just be prepared. Having information and knowledge is useful in helping us navigate, what's going to be ahead of us. And not just me saying that, even the Fed, going back to the first article that we talked about here, the Fed is out there saying things are going to get much worse, that we haven't seen anything yet. So take heed. Hope everybody's good. Keep stacking, everybody. Be an advocate for real sound money and free market economy, and spread the word about this video, or just spread the word about economic reality and what's really going on when you talk to your friends, family, and people you run into out there. All right, everybody. Thanks again for watching. We'll talk to everybody very soon. Bye now.